So what I found is in these golden years of life for these senior homeowners, it's really cash flow that matters. Cash flow trumps pretty much everything else. They just need enough money to live every month. They don't want to have to decide between groceries or medicine, or if they can take a trip or go out to eat. I had one lady one time, she goes, I just want some money to be able to go out to eat. And I'm like, yeah, I know. Just these little things that kind of take for granted, that people don't have a lot of breathing room sometimes in their budget on a fixed income. So this just gives them some flexibility.
Welcome, everyone, to Realizations, the podcast. I am your host, Andrea Gordon. And as all of you who are my longtime listeners know, this podcast was founded in order to educate the American people as to what it is realtors do, who we intersect with, what our job entails. I just realized when those NAR DOJ lawsuits happened that no one knows what we do, and therefore they can make all kinds of crazy claims all over the place, and people watch those stupid reality TV shows that have no bearing whatsoever on how real estate is actually practiced, and have no idea that, for example, it's one of the professions in the state of California, along with doctors and lawyers and people like that. So it was important to me to validate what we do and to show people how many ways they can get involved in real estate. And for those of you who are realtors out there, how many ways you can work within the framework of your license and how many different sorts of disciplines you can intersect with. So welcome today, Kevin Guttman. I'm so excited to have you here. And did I pronounce your last name correctly?
Yeah, thank you, Andrea. That's perfect.
Oh, good, good. Well, Kevin is in Colorado Springs, and he is a mortgage broker licensed in 20 states, who specializes in reverse mortgages. So I thought that this was an interesting topic today. We have so many people that are aging out of their homes, their primary residences right now, and they're living in places that are like 3 stories or challenging for people with mobility issues or what have you. So reverse mortgages can be a way to facilitate a change for your clients out there. So, Kevin, tell us a little bit more about the reverse mortgage process and what's involved and what exactly it is. A lot of people won't even know what a reverse mortgage is.
Yeah, thank you. So it's just like a traditional mortgage that people have had over the years. The differences are there's no payment required, payment's optional. The term of the loan is a lot longer. We have 30, 40-year mortgages, but for a reverse mortgage, the term is 150 years of the youngest borrower. And
Wow.
yeah, they've designed it so people can't outlive it, right? People don't live that long. The other difference is, Andrea, it's a non-recourse loan. So every loan, every mortgage that anybody's ever gotten in their lifetime, they are personally liable. They're personally signing to pay it back. With a reverse mortgage, it's non-recourse. What that means is the only recourse the lender has against getting their money is through the sale or refinance of the home when the last person ultimately moves out, or they don't maintain the requirements of the loan. And it's really easy to maintain what the qualifications, if you will, to get one. You have to live in it as your primary home. You have to maintain it, pay the property taxes, insurance. If there's HOA, pay that on time. People do that all the time anyway. So as long as they do those things, they can't outlive the loan, even if they end up owing more than the house is worth, which is not possible. It's possible. It's a remote possibility, but not likely, because people can really only borrow about 35, 45% right now based on these higher interest rates.
Okay. And who are the people that are getting these reverse mortgages?
Yeah, so there's 3 ways that people can use a reverse mortgage. The most popular way is to make your mandatory monthly mortgage payment optional. That's 2/3 of people use it that way. About 30% of people use it to access equity. You've heard the term house rich, cash poor.
Yeah.
So they've got their house paid off, or they got a bunch of equity, but they're just struggling to live. Everything's expensive these days.
Yeah.
Inflation is high, taxes are high, insurance is high. So people are realizing they need more money to live. So one option is they can access their equity. The third way, which we may want to drill down on with your audience, is they can finance a home. with a reverse mortgage, which has lots of advantages to do so.
Can you elaborate a little bit about that?
Yeah, so you alluded to it a minute ago, talking about how maybe people have lived in their home for decades, but maybe this doesn't suit them at this stage of their life. Maybe they can't navigate the stairs anymore. Maybe the neighborhood has changed and they don't feel safe in the neighborhood they kids grew up in. But neighborhoods change, right? And people move in and out. Um, Maybe they want to live closer to family or closer to their doctors. So for whatever reason, they need to move. And somebody can buy this is how I say it, buy a newer home with updated amenities in a safer neighborhood, make one large down payment, probably about 65%, and not have a monthly mortgage payment. So what I found is in these golden years of life for these senior homeowners, it's really cash flow that matters. Cash flow trumps pretty much everything else. They just need enough money to live every month. They don't want to have to decide between groceries or medicine, or if they can take a trip or go out to eat. I had one lady one time, she goes, I just want some money to be able to go out to eat. And I'm like, yeah, I know. Just these little things that kind of take for granted, that people don't have a lot of breathing room sometimes in their budget on a fixed income. So this just gives them some flexibility.
Hmm. And what are the interest rates on these loans like for the heirs? Because obviously the person lives there, chances are at some point they pass away, and then the house has to be sold to pay off the loan. What are the interest rates, and are they compounded, or are they how are they amortized?
Yeah. So it's a deferred interest loan. So
Hmm.
interest is accruing every month based on the loan balance.
Hmm.
Interest rates are about a point lower than conventional rates right now. So
Hmm.
conventional rates are about 6.625 today. This
Hmm.
is July 31st, 2026. 30-year conventional rate, 6.625. A reverse mortgage would be 5.625. Now,
Hmm.
let me put an asterisk by that statement. That's for an adjustable.
Hmm.
This is another difference. Unlike traditional mortgages where almost everybody chooses a fixed rate, the opposite is true with reverse mortgages. Probably 99% pick adjustable. Here's why. Interest rates are about 2 points higher with fixed, so they're mid sevens.
Hmm.
You get less money and you have to take all the money at closing. Well, one of the reasons people want a reverse mortgage is the flexibility of it. They
And you're
want,
talking about closing of the escrow of the loan itself, not a sale.
well, yeah, so think about it like this. This is maybe a better way to say it. A fixed rate is a closed-end loan. Any
Hmm.
money available, you have to take it at closing.
Hmm.
An ARM, adjustable rate mortgage, is an open-ended loan. As
Hmm.
long as there's equity available, you can access it three ways: lump sum, monthly payments, line of credit. What most people do is they start with the line of credit.
Hmm.
It's like a seesaw.
Hmm.
Remember on the playground, we used to use the seesaw. So on one
Hmm.
hand, you want interest working for you.
Right.
You want this line of credit to be growing in your favor. It
Hmm.
grows tax-free, it's insured, it's protected from the market, and it grows by compound interest. 0.5% higher than the interest rate. So if the interest rate is 5.625, that's what you're paying in interest on the balance.
Hmm.
You're earning 6.125 on your line of credit. And I try to coach people. I say, look, keep the teeter-totter in your favor, right?
Hmm.
Be earning more interest than you're paying.
Hmm. Hmm.
Now, at some point, you may need to convert that line of credit to monthly payments or lump sum, which is easy to do. It's just a
Okay.
piece of paper you fill out, and they switch it to monthly payments or lump sum. Sometimes people have life happen. The
You're
roof
right.
needs to be replaced, car needs to be replaced, maybe they want to take a trip, maybe they want to remodel their kitchen, whatever it would be. So, they switch from line of credit, get a little bit of money, go back to line of credit, or they might say, I'm a little bit tight on money right now. So I need a few hundred more a month. So it's just so flexible. That's why people choose adjustable.
Okay. And I've my own experience with a reverse mortgage was kind of a dreadful one, I will tell you. Not It wasn't my personal experience, but my experience with a client. who inherited a property, and the person had taken out like $80,000 like 28 years ago, and they never paid a dime towards that money, and it was compounding interest. And by the time the girl inherited the property, somehow it had mushroomed up over $500,000. It was a very different interest rate. It was a uxorious interest rate. It's not like what you're talking about. But that worried me. That worried me that the heirs could be in for some sort of a debacle when they go to sell a property that they should have equity in.
So
So,
let me just speak to that part for a second.
mhm,
In 2015, HUD and Congress made some changes to make the program more safe for seniors. Back in
And
the day,
this was around 2010 that I'm talking about.
so back in the day, if you had enough equity, you were old enough, you basically qualified. You didn't need to prove you had enough income to pay the property taxes, insurance, maintain the home. And this is, I've heard about this. People take out a bunch of money at the beginning, and then the clock ticks and the interest rolls up, and now they're underwater. So
hmm
one of the things that is a safeguard with a reverse mortgage, remember I mentioned it was non-recourse?
hmm
Here's the benefit to the client. No debt can be passed on to the heirs, the estate. Technically, they don't even owe the mortgage. It's
hmm
non-recourse. They're not personally liable. The house alone is responsible to pay off the mortgage. Let's say, for example, somebody will do the worst case scenario. At the closing, somebody borrows as much as they can at the beginning, and then there's more money available in year two. They take all of that out. Now they've maxed out how much they can take. Interest rates skyrocket even higher than now, and
hmm
they stay high for decades.
hmm
And appreciation is flat or declining, like we had in 2008 and 9. Okay, now they outlive how long FHA predicts or projects they're going to live in the home. Now they're underwater. Now
hmm
they owe 500,000. It's worth 450. Here's where the mortgage insurance kicks in. Most of these loans are FHA backed and they come with
hmm
mortgage insurance.
hmm
But what do you get for that? No debt is passed on to the heirs, the estate, or the borrower. So the mortgage insurance kicks in, makes up that $50,000 shortfall. The borrower walks away. Now, of course, there's no money for the heirs, but they were able to live in their house all this time, take money
Right.
out to live on. So it's kind of like what my friend said one time. He was talking to a family member who was upset that his mom took out a reverse mortgage. And he said, well, did your mom have a 401k or an IRA? Yeah. What happened to that? Well, she used that money. So, are you upset that she used that money to live on? No. Why did she get a reverse mortgage? Well, her resources were depleted. She didn't have any more money. Okay. So your mom needed money to live on and she had equity in the house. So she tapped into that equity to live on, right? Yeah. Okay. Well, were you in a position to help her? No. Well, what did you expect her to do?
Right. 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 Right.
At that point, the options are limited. And we always ask people, how long do you plan to stay in the home? Because if somebody isn't going to stay there at least 18 months, it's not going to make sense. They're not going to get
Right.
these. We want to make sure that they manage their resources well, because
hmm
you've probably read about people who win the lotto and
hmm
then they're worse off a couple years later because they raised their standard of living and now they're in debt. So we
hmm
really try to screen, so to speak, and make sure this is going to be a good solution for people.
hmm
I have a story I'm thinking about since we're talking about this. It's called HECM for purchase. HECM is the um, government's name for a reverse mortgage, home equity conversion mortgage.
hmm
So the very first lady I helped, her name was Carmen. She was referred to me by her daughter, who was a client, 84 years old, lived in a duplex on one side, and the rent paid the mortgage. And so I asked her, I said, hey, why do you want to do this? How's this going to help you? She said, well, to be honest, my budget's tight. I'm on a fixed income. Okay. So I said, well, tell me more about that. What does that look like? She said, well, to be honest, I'm using credit cards to buy groceries.
Oh.
84 years old. At the closing table, I'm doing the math. So I know we're eliminating the mortgage payment, paying off the credit cards. It's right under 1,200 a month. So I know the math. So I said, hey, Carm, uh, tell me what this is going to do for you. She kisses me on the cheek. First time I've ever been kissed at closing. Had to go and tell my wife I got kissed by an 84-year-old client at closing. But, but she said, this is going to help me sleep better at night.
Oh, yeah.
I don't have to worry about money.
Oh.
So that's an eliminate payment story. Do you want to hear an access equity
Sure.
story? So I had
Absolutely.
a client that was referred to me by a financial planner, and the husband had gotten sick and couldn't work, and wife had very low Social Security, and they just didn't have enough to live on. They had a small mortgage payment. It was almost paid off. Again, free up that mortgage payment. Now they're getting cash paid to them, monthly payments every month. It's just under $2,500 a month with no mortgage payment. So that's $1,200 now, and they don't have to pay. They can pay it if they want, but they don't have to. $1,300 a month coming from the reverse mortgage. And now they don't have to worry about Alex's income that he can't work anymore. It allowed them to stay in their house, age in place, which 91% of people want to do, and not have to worry about money.
That's great. That's a great story. I had a question when you were talking about the equity part of it. Let's just say, let's do a more positive scenario. Let's say that the person bought their house for $23,000 in the 1960s, and they're still in their house, and they take out a reverse mortgage for hypothetically $600,000. Their house at the time they take the reverse mortgage out is worth 1.1 million. Um, and then they continue to live there, live there, and they pass away in 2026, and the house is now worth 2.3 million. How much is the bank going to get when that house sells?
So it just depends. How much have they taken out over time? Like if they didn't take any money, then
Let's say they took 650,000 total out,
and it's accrued in interest.
and that's accrued and interest. Yes.
So here's what we normally do with people. We sit down, get some information. I call it a discovery call.
Mm-hmm.
And it's just fact finding. It's just asking questions, seeing if they're a good candidate, explaining how the program works. We show them an amortization schedule year by year, what their equity position is, what the loan balance is, what the property value is projected to be based on
Mm-hmm.
historical returns. And they say, look, we're only going to live here 5 years. We're going to live here 10 years, whatever. And they can see, okay, at 5 years, I'm going to have this much equity. At 10 years. So they can really make an informed decision about, I need some money to go live at the next place.
Mm-hmm.
So I got to decide if this is really going to work for me or not.
So if at the end of the transaction, there is $1 million in additional equity beyond what's owed to the bank plus that interest, do the heirs get the additional $1 million if the house sells for $1 million
Yeah.
more?
It's just like any mortgage. Whatever the balance is, you sell for this, you pay this off, the difference goes to the heirs of the client.
Okay, that's good to know. That's good to know. Well, you are wonderful, and we are just about at the end of our time already, believe it or not.
Can I share one more quick story?
Absolutely.
This is the best one because this is the HECM for purchase, which may be of interest to your clients. Had an elderly couple meet with me, and he was not in good health. And he says, I'm not going to be long for the earth. I want to be sure my wife's going to be taken care of when I'm not here. I said, tell me what that looks like. He said, well, I need her to get the right kind of house, low maintenance, single level living. And I need to make sure she doesn't have a mortgage payment. So she has enough money to live on when I'm not here, and she has to step up and take my Social Security, and
Hmm.
hers goes away. So sure enough, they close on a condo right before Christmas. And again, make one large down payment, no monthly payments required. They do need to pay the property taxes, the insurance, and HOA dues on time. And so 6 months later, she calls me and she says, hi, Kevin, this is Sharon. I just want to let you know that my husband passed away. And you had told us if this remains our primary home, we pay the property taxes, insurance, HOA on time, maintain it, I can stay to 150 years, and there's no monthly mortgage payment. Is that true? I said, that is true. You could hear the sigh of relief on the other end of the phone. She goes, oh, good. That's the only way I can afford to stay in this home.
Oh, bless her heart.
So
Yeah.
the benefit to the client is with an H for P, they can get a home that better suits them in a stage of life. The
Hmm.
benefit to the real estate agent is they have a database full of clients,
Right.
62 or 55 and over.
Mhm.
California, we do a lot of jumbo reverse mortgages. 55 is the age for that, 1.25 million and up. They can look at their database. Anyone old enough, 62 plus, 55 plus with enough equity, they can help them move to a home that better suits them. They get the listing and the sale. Everybody wins.
You're wonderful. Kevin, if people want to reach you and want your services, how did they get a hold of you?
Happy to visit with people by phone, 877-251-9709. Have a great website just full of amazing resources like a consumer guide and videos and articles and blogs and FAQ and blah, 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 a whole bunch of stuff. Reverse, reversemortgagerevolution.com.
reversemortgagerevolution.com. Well, that's one kind of revolution for today. Thank you so very, very much for being here with me. And I think this is going to be very, very useful for people that hear it. So I really appreciate your being on the show, and I'll have you back.
I
Great.
appreciate it. Thank you,
Thank
Andrea.
you. Bye-bye. If you loved hearing from these incredible voices shaping real estate, you'll want to catch what's next. Click the video on screen to keep discovering more inspiring stories.